अस्सलाम वालेकुम।
वालेकुम अस्सलाम।
वालेकुम अस्सलाम।
Sister Sarah, it's already 5 minutes above time, so I think we should start. It's a bit less attendance, but we can understand that is because of Ramadan. So I think we can start the event for today.
Yes. Sister Nope will be opening the session.
Distinguished participants, dear colleague, السلام عليكم ورحمة الله وبركاته. والصلاة والسلام على نبينا محمد وعلى آله وصحبه أجمعين. It gives us a tremendous pleasure today to welcome you to this public hearing session on the exposure draft of AOFI Financial Accounting Standard on Promotional Gifts and Prizes. This event is held in collaboration with Bahrain Association of Banks. We would like to thank them for taking the efforts and extending their support in organizing today's public hearing. The public hearing is one of multiple steps in the standards development process at IOFI and represent an opportunities for us to interact with and benefit from the knowledge, experience, and wisdom of professional individuals and experts from all corners of the industry on the newly issued exposure drafts. Today's exposure draft of IOFI FAS on professional gift and prizes prescribe the accounting and financial reporting requirements applicable to professional gift and prizes awarded by the Islamic financial institutions to their customer, including quasi-equity and other investment account holders. Now, and without further ado, let me invite to the virtual floor the Secretary General of IOFI, Mr. Omar Mustafa Ansari, who will present the exposure draft and walk you through its main content while answering time to time your question and interactive session. Brother Omar, the floor is yours.
Thank you very much, Sister Noof and Sister Sarah. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. Ladies and gentlemen, distinguished guests, Assalamu alaikum wa rahmatullahi wa barakatuh. This is indeed a pleasure to be with you again. And I would like to first thank our partners for today's event, Bahrain Association of Banks. And additionally, I would like to thank all of you for joining us in this important public hearing. We believe it's going to be a short session, but the topic is very important. And from that perspective, it is important for us to discuss this thing in reasonable detail, inshallah. And I hope while the attendance, because of we can well understand it because of Ramadan and people being busy in the last ashar of Ramadan in ibadat and other activities also having limited time because of that. So from that perspective, I believe it is a bit expected that the attendance may be impacted. But still, I'm happy to see all of you here. And I can see in the participants some very senior names and some very learned and seasoned professionals. So we look forward towards having a very good discussion, inshallah, on today's standard. It's a short standard, and even at my part, I'll try to keep it short, considering all these constraints that we have. And that's like something that that should not be considered as I would say that any restriction on our work, because inshallah we'll be holding 2 more public hearings after Ramadan on this standard, and there will be 1 public hearing in Arabic inshallah as well. So with these multiple events, inshallah, the total input that we expect will be received, inshallah, and obviously the option of providing comments in writing is also open. I believe that it will take at least 2 to 3 months for us to finalize this standard. So we have, I believe, reasonable time to receive comments in writing from all of you who are here. And additionally, we may need to invite other industry participants to provide their comments in writing. Regarding this standard, if you allow me to give a little bit of background, in Islamic finance in some of the countries, particularly in the GCC region, you might have observed that it is becoming a common practice for conventional as well as Islamic banks to have prize schemes. We know that even some regulators have reservations on that, and we know that there are certain countries where these sort of schemes were started, and then the regulators actually stopped them, particularly with regard to the investment accounts. While prizes, promotional gifts and prizes, in addition to the investment accounts and transaction-based activity, these are still available in most parts of the world on the other products, for example, credit card related products and other transaction-based services. But the normal banking services related and investment account related promotional gifts and prizes are more or less like, prohibited in a large number of countries, but still in certain countries are open. In addition to that, there are some unique products on that. For example, Sukuk al-Watni in UAE works like a conventional price bond. I'm not saying that it is exactly like a price bond, but I'm saying that its mechanism is somewhere close to a conventional price bond. While conventional price bonds are considered like impermissible by majority of scholars, but although there are some scholars who feel that there is some room for allowing price bonds, and even conventional price bonds, because of the reading of those scholars about the structure of the product, they feel there is some room for that. But the majority we are talking about, and for majority, we believe that it is considered that conventional price bonds are not acceptable as per Sharia. Why they are not acceptable, I will touch upon this thing in my discussion going forward. But the point is that there is product like Sukuk al-Watni, which is available in UAE, which is similar to what we are talking about here. Considering these factors, I would like to mention that some of the reasons behind these type of schemes have been a bit linked with the low interest rates in the markets as well. So particularly in some of the markets where the interest rates have been, or the benchmark rates for Islamic finance have been low, in order to attract common investors, because a common investor in a Wakala account or a Mudarba account, in particular, was getting even at times less than 1% or less than 1.5%, which is not even enough to pay his zakah. So from that perspective, he is losing on account of inflation, and he was losing on account of zakah, which means that his value of the total wealth is going down. We shouldn't be saying that. My apologies for saying that losing on account of zakah. May Allah forgive me. The meaning was that the total net value of his investment goes down at the end of 1 year if he gets only 1.5% in terms of profit, or 1% in terms of profit, and pays out 2.5% zakah, and loses out in terms of inflation. So this is a situation which in a lot of countries has been a bit discouraging for the banks for attracting deposits. And one of the reasons was that this was the main reason that they started offering products in form of such investment accounts, which are offering low returns, but additionally have gifts and prizes, particularly prizes like periodic prizes and grand prizes on the end of 1 year or 2 year like this. This is something which creates a direct close link with the investment accounts accounting. While investment as per Sharia, investment account as per Sharia should not be linked with a guaranteed contract of a prize or gift, but at the same time, as per Sharia, it is allowed that a unilateral gift or prize is given. We at AOFI, we already have a Sharia standard on promotional gifts and prizes. So the requirements of that Sharia standard are already in place. But with regard to the accounting practices for these, there were certain challenges which we had to address. First and the most important challenge, okay, let's first consider that most of the things that we are talking about are in the perspective of investment accounts. And we started this project as a discussion point within the investment accounts standard. And initially we thought that we may cover it as a section within the investment accounts standard, but then it was realized that there were more research and further sort of analysis was needed in this area. And additionally, it was needed that we cover other aspects of promotional gifts and prizes as well, which are not not related to the investment account. So if there are promotional gifts and prizes related to the asset side product or the transaction side product, like remittance transactions, or if it is related to the credit card or debit card type product, then what to do? So we decided that promotional gifts and prizes will be considered as a separate standard, which will be for sure, for us, the primary concern is the in promotional gifts and prizes which are related to investment accounts, which is a unique situation. But even for when we do the standard, we will cover whatever is related to the other type of products as well. Now, if we do these sort of products, so we know that the purpose of offering these prizes, etc., is to attract more investors in the investment accounts. So the question arises as to whether this is part of the what we call cost of funding in the conventional terms. For Islamic finance, we believe there is no cost of funding. You actually calculate the profit and you distribute the profit. So there is no fixed cost of funding. There is no guaranteed profit. So from that perspective, we believe that in Islamic finance, this is not appropriate to use the cost of funding term. But we know that right now we are working in a dual banking system, and a lot of our experts actually are originally coming from the conventional banking system. So they very commonly use this term cost of funding. But the point is whether it's part of the profit distribution or it is not part of the profit distribution. This is the question from our perspective, which conventionally can be put in the way whether it's part of cost of funding or not. In addition, the most important challenge is related to Sharia as well. That again, we are developing accounting standard right now, and we believe that the Sharia standard is already in place, which addresses the main challenges related to these promotional gifts and prizes, including those applicable on investment accounts. However, we believe that the Sharia nature of these might be different, might make it completely different from the nature of what it is considered from the accounting perspective in case of conventional institutions. So while conventional institutions may or may not have a different treatment for these type of items, but it will be difficult from our perspective. Now, I would like to mention in particular. I would particularly like to mention one thing here that's what I said that I'll discuss it later about prize bonds. So in case of conventional prize bonds, there is a loan agreement sort of that you put money with the government. There is a loan. And then government says that we will give prizes according to this. Now, some people believe that this should be considered permissible, that while it is sort of gambling and sort of gambling is there, and that is messer is there, or qimar element is there, and additionally they believe that uncertainty element is there, that is gharar, that who will be getting it. But on the other hand, this is also understood by some people that since the principal remains guaranteed and there is no change in the principal, then it is unilateral gift which is being given. Now, the Sharia compliant model of Sukukul Watni, or these sort of bonds or these sort of products that has been created, is not created based on loan contract, because the main view of scholars is kullu qarzin jara manfaatin fahuwa riba. So any guaranteed profit that goes on the loan becomes riba. And it is considered that from the government perspective, the amount that is to be given is guaranteed. That on a series of prize bond, they are guaranteeing a X percentage return, which is, for example, 10%, 12%, whatever it is. The only thing is that they additionally add the element of qimar in that some of the loan providers, in case of that bond, they take all the profit, or one of them take major part of the profit, others distribute some part of the profit, and others remaining don't get anything. So on one side, it is interest, and other side, the qimar element is also there. And since it is a contractual right for the part of the whole series, so for example, if one person purchases the whole series of prize bonds, what happens? Just put an example. If one person purchases the whole series of prize bonds, it means that all the prizes will go to him, which means that he is getting more or less guaranteed return. Now, Sharia compliant structure is based on like Sukuk al-Watni or these investment accounts products. This is based on the Mudarba, in which case the normal transaction of Mudarba takes place and there is a unilateral hiba without any agreement, just by way of an announcement by the working partner, that is the bank. It can be given on wakala at times, and it is given on mudarba at times. In these situations, the main contract remains halal, and anything related to that remains halal, and the unilateral gift or price that is given is not part of any contractual arrangement, which means that it is a pure voluntary act of giving a gift. Now, with regard to a gift, whether a gift, if it is a gift, can it be divided based on balloting between different people, that somebody gets it and somebody does not get it? So the problem, this problem again comes here in the core principle of Sharia, that as per Sharia, uh, the tabarro contract, that is non-commutative, non-exchange contract, if there is an uncertainty in that, that is still permissible as per Sharia. So let me give you an example. So for example, if I have some amount in my this hand, like it is hidden in my hand, and I offer to all of you that I'm selling whatever is in my hand for 100 BD. Anybody who purchases it from me and I sell it, whatever is inside this hand, like in my hand hidden from you, based on this uncertainty, based on this jahl, since it is an exchange contract that I'm selling whatever is in my hand without showing you what is in my hand at a price which is constituting a exchange contract. This is gharar, which is in excessive gharar, and it makes the subject matter majhul or unknown, which means that this transaction is not permissible. So we need to understand that gharar makes exchange contracts impermissible. But if there is gharar, even excessive gharar, in a non-commutative contract, in a tabarro contract, would it make it impermissible? The answer from Sharia is no, because this is act of one party giving to somebody. The counterparty can accept it or not accept it, but this is a unilateral act of tabarru. Now, this is the basis on which Sharia compliant model of takaful works, that it is based on tabarru and not based on exchange contracts, while conventional insurance is based on exchange contracts. And since conventional insurance is based on exchange contracts, anything in excess of the original payment makes it riba. And since there is uncertainty with regard to what you get and what you don't get, this also is creating gharar. So conventional insurance, and obviously the messer element, the qimar element is also there. So they all make it impermissible. While a tabarru-based, non-exchange contract-based takaful model is permissible. So our understanding is that as per Sharia, a gift that is given without a contractual arrangement as hiba by unilateral action of the Rabbul Mal or the Mudarib or the working partner or Wakil in case of Wakala contracts, that is considered permissible. This is where we feel that this distinguishes it from the conventional price bonds or conventional interest-based transactions having additional these prices elements as well. With regard to current accounts, etc., no material price and no material gift and no prices like this are permissible as per Sharia. This is clear in our Sharia standards. Accounting, we have just taken as understanding that this can happen on the current accounts. We just touched upon this thing. But with regard to the accounting that needs to be done for this transaction, where there is an investment account or similar product based on mudarba mainly, or at times based on wakala, etc. as well, in which there is a unilateral announcement by the bank or the working partner that I will be giving gifts or prizes according to my this sort of balloting or this sort of scheme unilaterally. I'm not bound to it contractually, but I do it unilaterally. So what I do? This is standard is about accounting of this product, and obviously it will touch upon other type of product or other type of gifts and prizes as well, including those which are general gift, because these are the promotional prizes, and then other gifts as well as other type of schemes that can be there on the asset side and transaction side products that we have touched upon. So with that, I can see there are a couple of questions, and then we will move to the discussion on the standard itself. Further detail about accounting, we will be discussing in that. I have just touched upon only the basics. Alhamdulillah, I can see that number of participants has increased. Again, it's not as per our normal number of participants. As I said, it was understood, but Alhamdulillah, I can see 70 participants now. So Alhamdulillah, it's a good number. I have two questions in the Q&A tab, and I think somebody was putting questions in the, somebody has put some questions in the chat window as well. So I think Sheikh Muhammad Isa has put some question in the chat window. So again, a question is, if you can kindly put your question in the Q&A tab, please. With this one, first question I can see is from Isatu Sir. Are there any regulatory enforcement and monitoring mechanism for the implementation of Islamic financial standards? Assalamu alaikum and welcome. And while this question is not related to our today's discussion, it actually depends on the regulators who have adopted AOFI's standards. Alhamdulillah, there is a large number of such regulators who have fully or partially or as guideline or in different forms adopted our standards. Probably roughly around 44 regulators in 36 countries are like that. But again, the level of implementation and monitoring and supervision for that by the regulator is a bit less. So now we are on one side trying to work closely with the regulators around the globe, and we are trying to support them by enhancing their capacity on that part, as well as we are trying to evaluate these things through our footprint reports that are being published now every 2 years. And additionally, we are planning to have in future, inshallah, we are just in the final phase of initiating the process of having impact assessment reports and country impact assessment reports for AOFI standards. Thank you very much for being with us. And I'm sorry I cannot go in more detail for this question because this is not related to today's subject. Again, the question is from Isato Sar. How do Islamic financial institutions handle such as zakat and waqf in their financial reporting? Waqf is not part of Islamic financial institutions function. Very rarely some Islamic financial institutions have created waqf, but waqf is as per Sharia a separate legal entity. So normally it should be subject to separate accounting. We have our FAS number, I believe 37, Financial Accounting Standard 37, for accounting for waqf institution, but that is not for Islamic financial institution, but it is for the accounting for waqf institution itself, because because the waqf itself is a entity as per Sharia. So that is one part of your question, answer to your question. The second part is about zakah. AOFI even earlier had a financial accounting standard on zakah, which was superseded more recently by us a couple of years back with our new Zakai standard. In addition to the new Zakai standard that we have developed, financial accounting standard, which is now available and effective, we have issued, we are in the advanced stage of issuing Zakat computation guidelines for Islamic financial institutions. So inshallah, you will find them coming up, inshallah, within this year. We have had multiple working group meetings. It's a long set of guidelines, so it is taking a bit time, but inshallah, within this year, our target is that at least these guidelines, at least the exposure draft of these guidelines is issued, inshallah. Thank you very much for being with us. And I'm sorry, today's discussion is specific about this subject. So this is like, not possible to go in more detail. Now we have Brother Farid Karkavi. Thank you for the series of standard revisions and new projects. Our pleasure, brother, and thanks for being with us. I'm sorry, I did not understand. Are gifts given commonly by a bank to top up the profits of account holders or wakalas in order to meet the announced expected rates acceptable or not? Brother, if you allow me, we have created exclusion of this type of hiba. So it is not subject of today's discussion, but let me reach that space, that place in the standard, and then I will explain it, inshallah. Thank you very much, brother, for being with us. Uh, Again, from Isatu Sar, one important area is the treatment of profit-sharing investment accounts, which are a key product of an Islamic bank. Should investors in these accounts be treated like depositors who owe a debt or fully risk-bearing investors? Can an order of priorities to establish between creditors as we normally be done in conventional insolvency law, given that Islamic law would normally rank all creditors equally? Thank you very much. It's a very good comment. That is again not related to today's subject, but let me clarify very quickly. Number one, the answer to your question is in series of standards that we have issued recently, final standards on the financial accounting side in December 2023. There is a standard on quasi-equity, there is a standard on control, there is a standard on investment accounts, including quasi-equity. There is a standard on off-balance sheet investment accounts. Earlier, we had issued a standard on Wakala bil Istismar, FAS 31. So these all standards, these 5 standards I refer to, they are all available on AOFI website. Sister Noof or Sister Hora, if you can kindly put the links to these standards on in the chat box. All these standards have been issued by AOFI. Now, there is another standard which addresses one very specific part of your question, that is exposure draft of governance standard on investment accounts. This has also been issued in the end of 2023 in form of exposure draft, and that is subject to public hearings that will be conducted in next couple of months. I would highly recommend that you should try to attend those public hearings, seeing your interest in this subject. Just have a look at it, provide your comments on that. The standard is available on the website. Sister Noof, if you can put a link to the exposure draft of the investment accounts governance standard as well. So the answers of your questions are provided in more detail, even including the priority of liquidation is also provided there. One thing, let me clarify very clearly. The one part of your question needs a very clear answer right now, although we have provided this answer many times in our standards, but let me clarify. We believe that in Sharia, the condition of something becoming halal is that the risk and reward are shared as per Sharia, which means that the risk and reward related to the underlying assets of investment accounts rest with the investment account holders, and which mean that they are not treated as liability. As per AOFI, we consider them as a quasi-equity. This conceptual discussion is available in our framework, our FAS 1, and more detailed in the control standard and the quasi-equity standard, quasi-equity and investment account standard that I referred to you just now. So the answer is we don't consider it debt. Since we don't consider it debt, then its order of priority becomes different. And that further detail, as I mentioned, is available in a separate section within the standard on investment accounts. Thank you very much for being with us, and thank you very much for raising some very good questions. Only unfortunate part is that today I would prefer not to go into many of these discussions which are not related to today's standard. So from your side, with the due respect, I would say that please put comments related to today's discussion. Otherwise, I'll try to handle these questions in the end. But we kept a very short time for today's public hearing because of people being busy in Ramadan. It is last 10 days, and people are some of the people had last night as one of the Laylatul Qadr. So from that perspective, I will not be answering your questions unless unless the questions are on the topic. And secondly, if we have the time in the end, I will address your additional questions. Brother Abdulaziz Khatak has a very good question. At what point will promotional gifts and prizes be deemed impermissible? Brother Abdulaziz, thank you very much. I think you have raised some very, very good point. Some of these aspects we have discussed in the investment account governance aspects as well, particularly with regard to the gifts and hiba. We have even put some limitations on that. Again, that is a limitation that is coming from the governance perspective, not purely from halal and haram perspective, but from maqasid and the maqasid al-uqud perspective. For me, if the hiba becomes predominant in the return, for me, it means that you have breached the original contract. This is my understanding. I'm not saying that this is the official view of your Sharia board or your governance board. What I'm saying is that at times people are trying to give hiba even in case of losses. I personally believe these sort of practices are against the real tenets of Sharia and real teachings of Sharia. AOFI Sharia standard does not allow you to pass on hiba against losses. It allows you to smoothen the profit to some limitation. And we, as AOFI Governance and Ethics Board, have issued this exposure draft which clarifies a lot of things. So I would suggest that you put for the gifts part, this part is covered. Sister Saira and Brother Harun, can I suggest you that please make a note for the team working on the governance side and for the UFI Governance and Ethics Board team for today, as a public hearing comment from today, that these promotional gifts and prizes should also be considered in the governance standard, and we might need to provide a limit on these as well, because limit on the journal hiba is provided in that one, but limit on these promotional gifts and prizes is not provided. So at least some aspects of these promotional gifts and prizes in line with this comment and in line with the Sharia board, Sharia standards of UFI should be covered. Brother Abdulaziz, thank you very much. It was a very good point. The core principle is already provided in the Sharia standard, and some of the issues have been addressed in this standard as we move ahead with that. Brother Abdulaziz Khatak, has another point which is linked to this one. I think I addressed it already. Is there a limit to the size of promotional gifts and prizes issued by FI so that to promote a healthy competition? I think that what I discussed has already covered this one. We have comment from our dear sister Amal Al Masri. I suggest that explicit statement be added within the disclosure paragraph stating that prizes that are subject to the standard are not intended to support deposit profits. Sister Amal, I think we have covered something like this, but your comment is very valid. Let's discuss it in the working group, inshallah, and see how we can cover it. One part is there that the normal hiba, as was also addressed in the question by Farad Farid Karkabi, it has been considered excluded from the scope. So from that perspective, we have excluded that part, and we have put some of the principles here as well. So let's go to the standard now. Now we have comment from an anonymous attendee, but this comment from Sister Amal is very valid anyway, and we need to see how we can improve the wording how we can improve the wording on this part. But sister, one thing, when we say are not intended to support deposit profits, exclusion part is there. We can provide some exclusion and some basis of conclusion, but I don't think that we can put it in the disclosure paragraph. That is my understanding, but we'll discuss it later in the working group as well. There is comment from Brother Mehdi Hassan. Assalamu alaikum. I wish you the best. Thank you very much. And walaikum salam. How can zakat, tabarruk, and endowment investments of Islamic banks in non-Islamic countries be calculated? Actually, again, this is not related to today's subject, and since today's time is very limited, I'm sorry, I have to apologize answering these questions, but part answer I've provided. We have already issued, there is a Sharia standard on zakah with detailed guidelines. There is an accounting standard on zakah which is available. There is a detailed zakah related guidelines that are coming. I request Sister Saira and Noof to make a note that if we can pass on this question to the zakah guidelines working group to make sure that they can address this one. Thank you very much for this one. There is comment from Shinof Shaib. What is the impact of this standard on the financial statements? The quick answer is that it will segregate the placement of profits for some of the banks who are adding it to the profit distribution. Number one. Number two, it will require you to put provisioning upfront, which is not being done by everybody. Some of the banks might be doing, but majority is not doing. So let me take you through the standard and then come back to this question towards the end again. So with that, I will share my screen. This is a short standard, and I'll try to be very quick on the core concepts of the standard itself. And then we can come back to the question and answer again. So the initial preface and introduction related things I have already provided. The objective is to prescribe the accounting and financial reporting requirements applicable to promotional gifts and prizes awarded by Islamic financial institutions to their customers, including quasi-equity and other investment account holders. Scope: the standard shall apply to promotional gifts and prizes, including loyalty programs announced and awarded by an institution on behalf of the owners and out of the amounts attributable to the owner's equity to all specific customers, including quasi-equity and other investment account holders. This standard shall not apply to HIBA provided by the institution on behalf of the owners as a profit smoothing technique during the computation of periodic profits and losses of an investment pool at the time of constructive liquidation that falls within the scope of respective AOFI phase. This question, I think, provides this paragraph provides answer to brother Farid and partially provides answer to sister Amal, I believe. So we have excluded the common HIBA, which is part of the profit and loss computation, from this promotional gifts and prizes. HIBA shall be provided subject to the contractual Sharia and governance requirements contained in respective AOFI standards, while the promotional gifts and prizes, which are not part of the routine computation of profit and loss in form of HIBA, shall be considered according to this standard. Promotional prize in the specific context of this standard is a prize used to promote specific products or services or to attract investors by way of holding a draw or by achieving a defined target or a combination of both, which is awarded at a given point of time in future. Promotional gift in the specific context of this standard is a gift used to promote specific products or services to attract investors that is awarded by the institution from time to time to certain customers. I think Sister Amal's point also need to be addressed here. So what we can do, Sister Saira and Noof, if you can make a note of it, we should say here in B, also see para 3. So it will further clarify it. Okay. So we should create in the para 4b, we should create a link of para 3 that also see this. Now, loyalty program is usually in the form of points accumulated by the customers against the purchase of continued utilization of products or services or for maintaining investment accounts, enabling the customers to exchange accumulated points for cash, goods, or services on a complementary basis or at discounted rate at a future date. Now, types of entitlement. Promotional gifts and prizes are categorized into following types. We are clarifying these 3 types for accounting purposes. Promotional gifts where entitlement occurs instantly at a specific point in time. Promotional prizes that are announced in advance to be awarded at a future date, mostly contingent on a draw or achievement of a target. And loyalty programs where obligation is accumulated over a period of time. Now, recognition and measurement. This is about promotional gift. An institution shall record an expense with regard to promotional gifts as and when incurred. Whenever you give a gift, you need to immediately recognize it as an expense. Whenever it is incurred. When we talk about incurred, which means that even if it is not passed on in cash, but when it is announced or when it is decided, it becomes immediately, if there is no significant uncertainty with regard to its payment, and outflow becomes like, whatever meets the definition of liability, when it meets the definition of liability, it needs to be accounted for immediately. Now, coming to promotional prizes, because there are different types of promotional prizes, so it is to be clarified here. Initial recognition. An institution shall record a provision against the obligation arising from promotional prizes as and when A, there is an existing constructive obligation requiring the institution to award the promotional prize, whereby it is more likely than not that the economic resources will flow out of the institution. So there is more than 50% probability that there will be a payment due on account of this promotional prize. You need to record as it becomes existing constructive obligation, you need to record it. And we are saying constructive obligation, we are not saying legal obligation, because we believe that it is based on a unilateral action, not on a joint action, exchange or cumulative action. So that's why we are talking about constructive obligation. This is also aligned with other AOFI's framework requirements and requirements related to onerous commitments, which are contained in FAS 30. The institution is able to reliably measure the obligation, including fair value of in-kind promotional prices. Brother Harun, reliability of measurement is effect was discussed in this point of time, if you now recall, that why we came up to this discussion. And it was discussed with some other place as well, but here even this is very important. So the fair value of in-kind promotional prices are very important to be measured reliably for this purpose. C, an existing constructive obligation referred to in paragraph 7A normally arises when an announcement is clearly communicated through explicit requirements to a specific class or classes of customer, including investment account holders, and resultantly the institution has created a valid expectation among those parties that it will honor its commitment. I think Sister Saira, Brother Harun, there is some typo error that B, there should be appearing A and B, and then C and D are appearing within that without semicolons. So the semicolon should be there on B and C, and should appear at the end of C. I don't know why this mistake has happened. I don't know whether it is in the presentation only or it has happened in the final, in the standard draft as well. But I think this is something that you need to check quickly and make sure that it doesn't happen in the final version. So an existing construct, the last part is the amount against provision for promotional prices recognized shall be charged as an expense except where the requirements of paragraph 12 apply. No, I think there is a numbering issue here, brother. Brother Harun, I think there is a numbering issue here. I think we need to see the numbering of C and D. Either we make it, then it might need some change, but I think C, it is not C and D, it is actually 8 and paragraph numbering needs to be corrected here. I feel that I feel a bit concerned that maybe the final proofreading for this one is not appropriate, or there is a problem in this version only. So my apologies to all of you for this inadvertent mistake, but our team should be more careful in this. So I just request all of you, Sister Saira, Brother Harun, to be a bit more careful in this one. Just need to be corrected, and if necessary, we need to issue we need to update and correct in the exposure draft version as well. Now coming to the subsequent measurement. The carrying amount of provision shall be reviewed at the end of each financial reporting period, and necessary adjustments shall be made. Any changes in the amount of provision shall be accounted for as a change in accounting estimate and recognized as an expense or reversal thereof for the period, except where requirements of paragraph 12 apply. So what we are saying that whenever you enter into a situation where you have a complex sort of how I would put it. When you have a complex situation in which there is some amount of expense that will be incurred in form of outflow of economic resources at a future date in form of different gifts and prizes, which are according to a scheme. So the question first is, what is the point of time when you get into this constructive obligation? You do not have any revocation right. Now, in some parts of the world, there are regulatory restrictions on these type of prizes. And if these are announced in that situation, you have a legal liability as well. And at times, some of the ministries require that you make appropriate deposits against those values to support your claim for those gifts. Similarly, the legal requirements, the regulatory requirements may be different in different countries. So some situations, it is more easy to verify what is the right point of time there. On the other hand, there are situations where the timing of that irrevocable sort of condition where you enter into a constructive obligation are not very easy to be defined. Secondly, there can be some changes in the price schemes. At times, what happens that the price values are increased over a period of time. So what is the point when you need to readjust your provision against that? Now, if you need to give the price after 1 year from today, Do you need to recognize the provision today, or you need to recognize the provision when you pay it? Or can you do a accrual of that on a monthly basis? The most common accounting related issue is, can we do an accrual of it on a monthly basis, or can we consider it as a cost of funding and we just consider it part of distributable profit over a period of time? And where do you place it? Do you consider it as a marketing expense, or do you consider it as a part of a cost of funding and put it in the profit distributed? These are the real accounting challenges which we have tried to address in this paragraph 7A to D, where we are saying that you need to determine the constructive obligation, and that constructive obligation normally arises when an announcement is clearly communicated through explicit statement or consistent history of past action for the award of promotional prizes to a specific class or classes of customers. And resultantly, the institution has created a valid expectation among those parties that it will honor its commitment. So I am an investment account and I am putting an investment account with you, or keeping an investment account with you, with an expectation that you have made it this announcement as a continuing practice, or you made it an announcement as a new practice, that you will be giving giving a prize like this. And obviously this expense need to be recognized on day one, which means that the liability is incurred today. Even if the customers withdraw their amounts, even if there is no enough, you are doing it with an expectation that your business will increase and you will have more investments. But on the other hand, if the business goes down, can you back out from that? Unfortunately not, because your commitment is made today. Since your commitment is made today, so it is similar to an onerous commitment, which means that a constructive obligation today exists, which means that you need to recognize the provision immediately. And in most cases, you need to charge that provision as an expense today, not in future. So even if I'm going to give my gift after 1 year, in most situations, according to requirement of this paragraph, unless requirements of paragraph 12 apply, I have to recognize it immediately. Then the carrying amount of the provision shall be reviewed at the end of each financial reporting period, and necessary adjustments shall be made. Any changes in the amount of provision shall be accounted for as a change in accounting estimate and recognized as an expense or reversal except for the requirements of paragraph 12. Loyalty programs. The carrying amount of the provision shall be reviewed at the end of each financial reporting period, and necessary adjustment shall be made. I think this paragraph is duplicated here. This is an error in the presentation, I believe. This is an error in the presentation. So I'm skipping this one. This is correct. An institution shall record a provision against obligation for loyalty programs based on the points accumulated to the customers in line with the requirements of relevant phases, also considering the following where significant: probability of expected utilization of loyalty points by the customers, timing of utilization of loyalty points by the customers, and the amount against provision for loyalty points recognized shall be charged as an expense. Subsequent measurement. Brother Harun, about placement of paragraph 9C, we should discuss it in the working group, whether we keep it as a separate paragraph or as a point C of 9. Coming to subsequent measurement, the carrying amount of the provision shall be reviewed. It's similar, similar to promotional gifts and prizes, that it need to be reviewed on periodic basis. So it should be done. And I think, again, there is a duplication of slide here. Sister Saira, Sister Noof, please have a look at it. There are multiple errors in this presentation. It should not happen, please. Classification and charging of expenses. The expenses referred to in paragraph 6, 10, 11, 12, and 13 shall be recognized as promotional and market expense. Explanation. The promotional and marketing expenses shall be generally charged to the owner's equity of the institution unless the promotional gift, promotional prizes, and or loyalty program related to asset side or service-based products and the sources of funding and attribution of respective revenue of such product is an investment pool, in which case it shall be considered as an expense of the investment pool. So what we are saying that but this investment pool thing applies on the asset side. It does not apply on the liability side. Please just let me clarify. So if you have on the asset side, you have a leasing scheme, and in that leasing scheme, there are gifts. Like for example, you provide them like some for the lessees, you provide them some promotional gifts and prizes, some schemes for them. Like for example, free service for some time, or you offer them, for example, free takaful based on some criteria or based on some sort of gifts, etc. So whatever is related to the underlying assets of the investment account and that is directly related to them, that can be considered as a part of the investment pool accounting. But the profit promotional prize or gift that is given to the investment account holders will always be recognized as the promotional and marketing expenses. And Brother Harun, please make a note of it. I think we should clearly say that promotional marketing expenses attributable to the generally attributable to the owner's equity. Explanation provides it, but I think in the main sentence also we may consider putting the owner's equity. Now, with this paragraph 12, generally the expenses in respect of promotional prices shall be immediately recognized. However, there may be certain material prices that can justify a recognition of a corresponding asset to be amortized over a period of time, to the extent that awarding of such promotional prize is not vested, subject to the following condition. Now, what we say by vested, which means that if a promotional prize is due today, to that extent, this is not possible at all. But if it is due after 2 years, and if other conditions here are met, in that situation, we have allowed something to be deferred over a period of time. Now, this is something which is subject to our accounting board even requested the market participants to provide comment on this one, because it is based on some of the industry participants' need, and it may be considered a bit deviation from IFRS. Now, most of the things we are trying to keep aligned with the IFRS, but considering this one, because the nature of this one for us is different from nature as per IFRS. So from that perspective, this is something that we have, even for accounting under IFRS with regard to the normal return and funding cost, etc., can also be different from our treatment. So from this perspective, this is something on which we need input from the accounting fraternity in particular, if they feel that this is a good requirement, or if they feel that this is like allowing a flexibility to Islamic banks, and it should not be taken like this. The point is that, for example, if I have a scheme in which for next 3 years, every year there will be one prize, and after 3 years, there will be a bumper prize. This is one single scheme. Every month I have a prize. Every year I have a grand prize. Every third year on completion of 3 years, I have a bumper prize. Now it means that this whole scheme is actually providing me a benefit over a period of time. Can this benefit be fully realizable? These are the conditions. So we are saying that if it is not vested, means that the price that is due after second year and after third year and after first year, they are all not vested today. Today, I have just started the scheme. So no prices are vested today. But according to the earlier requirements of paragraph 7 in particular, we need to recognize the whole profit. We have to recognize the whole, not the profit, the amount of price as a provision today, applying the accounting requirements for the provisions. So it means that I need to recognize the provision as a liability, because since today I announced it, I'm into a constructive obligation and I cannot back out from that constructive obligation, which means that it is a liability today. But is it a full expense today? So we said, unless requirement of paragraph 12 do not apply, it will be an expense today. But if the requirements of paragraph 12 apply, then we can have it as deferred over a period of time. So let me quickly try to take you through the conditions of para 12. The promotional prize is the part of marketing and promotion campaign spanning over a period of at least 12 months, whereby the promotional prizes is awarded at the end of over a span of such period. B, the total obligation in respect of promotional prizes is considered material. And 3, positive correlation is demonstrated between increased business and hence increased revenue against such assets to justify the matching concept through appropriate projections and financial models, provided that suitability of such projection financial models shall be reassessed at each financial reporting date. So if you have a financial model that this price, which is material over a period of time, will be allowing you some benefits, this will be considered acceptable. Then we have presentation and disclosure requirement about the accounting policies, about the provision, reversal of provision, and corresponding expenses that you have accounted for, etc. And we expect that this should be applicable on 1st January 2026. With that, I take you to the question and answer, inshallah. Let's see what the question answer, questions we have received here. Brother Farid Karkabi has your answer, I believe I have provided, that the gifts given by normally to top-up profits are not part of this one. This one is about the additional gifts and prizes. Now, one thing, let me be clear that while we are discussing this one, it does not mean that we want to promote this practice or we want to support this practice. We are just trying to address the market need that this practice exists. So we issued a Sharia standard and now we issued accounting standard just to put controls on that. But we believe that Islamic banks should not be doing a marketing like conventional price bonds or conventional price products. That is not the right way of marketing. If you ask us, this is not the right way of doing business. They should be trying to keep a proper sharing of profits and losses with their customers rather than attracting the investments through these sort of prices. That is our general view as institution or as AOFI's accounting board, but it does not mean that anything that is as per Sharia permissible we just do not address it. We want to address whatever is permissible as per Sharia, and we know it is a market practice in certain markets, so we want to respond it. Particularly, certain markets have a very common practice for this one, and they are following AOFI standards. Thank you very much, Brother Farid, for being with us. Then there are certain questions that I mentioned that because of limitation of time, I won't be able to discuss them. Then we have a comment from the this comment I initially addressed, and I said that I will towards the end I will provide answer. So the comment was from Shinof Shaib. My apologies. Every time I have to apologize. So many people join from different parts of the world that at time we are not aware with the right pronunciation of the name. So for that, my apologies. Even at time we don't know whether it's a sister or a brother. So we have to be like, you have to kindly be kind with us to apologize, to accept our apology on this any mispronunciation of name, etc. What is the impact of this standard on the financial statements? Now I have the answer for you. Number one, if you announce a prize scheme, you need to record liability today. Secondly, you have to recognize the expense as a marketing and promotional expense and not as a profit distribution expense. And number three, with regard to long-term schemes, long-term promotional prizes schemes, you can have a long-term scheme, in which case you can have a corresponding asset to this liability, which will be amortized over a period of time, subject to the conditions of paragraph 12. Thank you very much for being with us, and I hope this answer is now enough. We have comment from Sausan Awadi. When the Islamic financial institution receive these promotional gifts and prizes, are they covered by an standard? Actually, we are not aware of any common situation in which Islamic banks or financial institution receive this prize. So honestly, we haven't covered it in this one. We will take your comment to the working group and we'll see if working group and any other. But if you have any real life examples for it, can you just forward those real life examples to us if you are aware of any example, so that at least we can take it to the working group and to the board to consider accounting for that side as well. But otherwise, it will be for me, very generally speaking, it will be a windfall income. So whenever you get this prize, you recognize it as an income. for any other financial institution who receive it or any customer of those financial institutions. So if a corporate, normally these are offered to individual customers at retail level, but even if it is given to corporate customers, if they get it, they have to do accounting on a receipt basis, that when they have established the right of receiving it, then they will recognize it. Thank you very much for being with us and for your comment. Brother Iltijani Ahmed Salam, in gambling, money should be paid from both sides. This condition applies to price. Thank you very much. Thank you very much, Dr. Iltijani Ahmed. I think you are right. That is the point, that it is not gambling because it is unilateral. That was the reason that I said that according to Sharia, the principle of gharar and also the principle of mesar or qimar does not apply in this one, because it's not a exchange contract. In exchange contract, both parties have consideration to be paid or given. So it can be money versus money, or it can be money versus good, or money versus benefits, etc. So considering that, this was what I tried to explain in the beginning, that since in Sharia, if there is a non-commutative contract, tabarru contract, there is, if there is uncertainty in that, if there is a balloting random element in that, that will not make it impermissible because it is not a commutative contract. I believe you have said the same thing. Thank you very much for this. My dear elder brother Sadaqat Khan is here. Assalamu alaikum, sir. Promotional prices shall be charged as an expense, but it should be charged to shareholder expense and not depositors pool distribution. Brother Sadaqat Khan, I think that's what we are saying. Only one thing we are saying, that if it is promotional price related to the asset side, and there is a leasing scheme or some other, like, assets on that side which have a promotional price paid, in that situation, depending on the respective accounting policy and contractual obligation, some charge may be given on that side. I think we need to take a note of it. We'll try to clarify it further, so that although there is an explanation, but maybe we need to clarify further that explanation, or maybe we need to add additional bits of conclusion to explain this part. No disagreement on this part. Generally, that all promotional expenses shall go to shareholders. Only one situation is there, that if there is an underlying asset related to which there is a promotional gift or prize scheme, that expense may be taken to the if it is related, part of a direct expenses related to that scheme, it will come to it will come into the pool related expenses. Sister Amal and Masri again has a comment. May I have to check with Fazwal illustrative financial income statement if there is separate item of expense? No, sister, I think that it should not be needed in the income statement, but in the notes. So Sister Saira, Saira and Noof, if you can just take a note, Brother Harun, if you also can just keep in your noting that for the illustrative financial statements, in the notes to the illustrative financial statements, in the where we have the administrative the marketing expenses, we may need to have a line item in the, not on the face of income statement, but in the note of the promotional and marketing expenses. In that note, we need to mention it. When we developed that standard, it was not, this standard was not issued, and still it's not final. But in the next version of the illustrative financial statement, I think we can do that. Thank you very much, Sister Amal. It's a very good point, and we'll inshallah try to take care of it. So the message should be passed on to the team working on the illustrative financial statements, particularly on the update exercise of the illustrative financial statement for next year. Brothers Sadaqat Khan, what is UFI guidance on cash prizes in millions being offered by Islamic banks on the customer saving accounts through referral draws? Brother Sadaqat Khan, I think I responded this thing very briefly, that we do not want to encourage it, but we cannot say something which is halal as haram. So that is the point, that it is happening in the markets, and there is a Sharia standard which puts conditions for that. So that Sharia standard is already there. I have just made a note of this for the governance team also, to put some governance related controls on that as well. But then once it is done, then again, unfortunately, this is one of the bad practices of Islamic banks, that they try to mimic and replicate the conventional practices. There was no real need of doing this thing, unless you just want to mimic everything on the conventional side, or you want to play with the greed element in people's mind rather than sharing the just and true profits. For us, our approach is we should try to be more fair in distributing profits to the investment account holders based on the actual returns, rather than attracting them through giving them very low returns and attracting them through these referral draws, etc. For me, I think on the governance side, I think we need to put this control that the total of these promotional prices should not be more than X percentage of the bank's administrative marketing expenses, as well as per percentage of the amount related to whom this scheme is launched. Thank you very much. It is an excellent point, and I am with you. If it is up to me, I would like to put a ban on this one. And I know regulators, and I would like to request the regulators attending today's event that we know that there are some regulators in different countries. When they started seeing these type of schemes coming up with the investment accounts or the bank accounts, they said that bank is a bank. Bank should not become a gambling house. So they stop those practices altogether. So even it is for the purpose of safeguarding the stakeholders' interest that on one side you deprive them from the average return, and the average returns on investment remain on a very low side. And on the other hand, you keep them attracted through the greed element or through this attractive price element, which is not a fair and a good and just practice. So from that perspective, if regulators put restriction on that, I am more happy and I'm more in favor of those regulators. Personally, I'm not saying that from AOFI's perspective, again, what is halal, what is not haram, obviously has been specified in Sharia standard, and accordingly, we are developing this standard, but we do not want to encourage these practices. I think, Sister Saira, I think in couple of our standards, we have mentioned and noting that by issuing this standard, we do not want to encourage this practice. I think we have mentioned it for some requirement in Windows or some other places. So I think we should mention this thing that purpose is not to encourage this practice, but just to address the market needs. Susan Awadi has this question. I think I answered this question later. Is there any actualization of the amount of promotional gifts and prizes if they are going to be given over more than 1 year? There is no accrual or like this, but rather you will record the liability immediately. But if it is subject, and you will charge the expense immediately. But if it is more than 12 months, and if you have a financial model justifying that it is going to enhance the business, and in that situation, and if to the extent that these prices are not vested, which means they are not become due already, to that extent, a provision can be made and a counter asset can be made. This is requirement of paragraph 12, which is subject to discussion. We would like to have comments from you and other learned members to clarify on that. Thank you very much. In the introduction, I into the board, which board it is to be mentioned. It is AB or mentioned in appendices. I think we should mention in AB. I think, thank you very much for clarifying this thing. Sister Saira and Brother Harun, please make a note of it. When the first time we use the term, the board in introduction is a separate section, preface is a separate section. So whenever we use it for the first time, we need to mention that we are talking about the AOFI accounting board. So we should be clarifying it. The second point, this is from Brother Muhawi Ismail. So the second point is in loyalty programs refer to AOFI phase and paragraph 165 phase 1, preferable to cover it. Okay, you're talking about, I think, the hierarchy of accounting standards that is to be applied, including IFRS also. I think if you can clarify this comment better, but I think what my understanding is that you're talking about referring to IFRS. I think that's what we have done, that further accounting for loyalty programs is with IFRS or the generally accepted accounting principles in your countries. So it needs to be done. I think, thank you very much for your comment. I think just if you can clarify it a bit better, it will be better for us to take it forward. As I understand your point, I'm okay with it. But if you can write it again in a more clear wording, we will be very, very thankful to you. Either now or later in writing, you can send it to us. All the comments that you cannot provide today, you can provide to us in writing and other upcoming either through attending the upcoming public hearings or in writing at accounting@aofi.com. Brother Sadaqat Khan has Brother Sadaqat Khan has said, perhaps the multiple errors in the slides are due to working in Ramadan. So please this time forgive them considering the values of Ramadan. Brother Sadaqat Khan, thank you very much for mentioning that. Highly appreciated the work. We highly appreciate the work done by our sisters, our colleagues, and our whole team here. And I was just mentioning that we need to correct it. It is not that I'm going to be angry on them. We all appreciate this hard work that they are doing. I can tell you that they were working till late evening yesterday to actually complete this one, because we have upcoming conference, we have upcoming other so many events related to conference, and our own UFI's own activities are on a very high speed right now. So from that perspective, it is understood and understandable. So, but in the final version of the standard, if that correction is needed in paragraph 7, that is the only thing I'm concerned about. The presentation, I'm not concerned. So my main focus is on that one, that if I can recall that there were some changes made by the board in that paragraph, I'm just concerned that whether those were incorporated properly or not. That is the reason that I'm a bit concerned about that paragraph 7. Other than that, I think this is all understood. And thanks to the team again, and thanks to you for actually mentioning it. Highly appreciate your efforts, Sister Noof and Sister Saira, and all other colleagues. Thank you again. I think with this, we have covered all the questions related to the subject. There were some additional comments from Isatu Sar, which were not related to today's subject. So I'm really, really sorry that although some of your comments I was able to address, but some I'm unable to address completely. But let me just try to have a very quick look at it. Very quick, I'll just see. So your first comment is about Islamic money market, about setting off. AOFE generally does not allow setting off, and we normally want each of the balance to be reported separately unless there is a legally enforceable right. Thank you very much for this comment. But again, it was not related to today's subject, so I've just touched it very quickly. Your second comment is with regard to the financial stability and the challenges related to the financial stability. It's about particularly that that the regulatory and supervisory frameworks for Islamic finance to be consistent. Actually, whatever we are doing as part of AOFE's all activities towards standardization and harmonization, it is all supporting that objective that you have kindly mentioned. So we are trying to cope to that challenge as per our limited capacity, and we are very much thankful to you for being here and for providing your very valuable comments. So we are trying to do our part on this, and we look forward to your continuous support. The second challenge that you have touched upon is related to integrating the Islamic finance into global monitoring frameworks. It is an excellent point. IFSB, you have touched upon that. IFSB is already working with IMF on these points. We have worked with IMF in last several years in different ways. Like we have tried comments on their papers related to Islamic finance. We have tried to be in contact with them. We have requested IMF to be part of our public interest monitoring consultative committee that reviews all our standards, and IMF is an observer member right now. They did not approve to be a full member of our PIMCC, Public Interest Monitoring Consultative Committee, but IMF is a part of our PIMCC as observer member. So thanks to them for providing their support to UFI. Obviously, IFSB is a regulators body, and IMF and World Bank are already their members since beginning, sort of. So from that perspective, for sure, IFSB has a closer working model with them. AOFE is, on the other hand, primarily an industry-led body, which works in collaboration with regulators, but it's not primarily a regulatory body, rather it's a standard-setting body. So from that perspective, our style and our connection with these infrastructure bodies and regulators is different. So thank you very much for your comments as well. I have just tried to very briefly touch upon the comments that you raised, although they were not subject to for today's discussion, but they were very relevant for what we do at AOFE and for what we need to be updating our colleagues here in this today's public hearing. That's why I touched upon these things very quickly. So with that, I would like to conclude today's session because there is no other Q&A here. So I would like to put it back to my colleagues at Secretariat to close for today's meeting. And I would like to thank all of you again and would like to wish you a very blessed Eid, inshallah, ahead of us in few days. Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Brother Ammar, for the insightful presentation and the question and answer session. We'd like to thank Bahrain Association of Banks, all the participants, and all our colleagues here in AOFI. Inshallah, we'll see you in future in other public hearing for other standard in English and Arabic. Assalamu alaikum wa rahmatullahi wa barakatuh.